Thank you. Good afternoon, everyone. Hope you had a nice lunch. This is a 25-minute panel, so it's quite quick. We'll get straight into it, if that's all right. OK, so my name is Wasim Mushtaq, and I'm moderating the session today on Bank Modernisation from strategy to execution. So I'm the founder of 1CG, a strategic delivery partner for fintechs and banks. Over the last 20 years, I've held quite a few senior positions. My last role was the Chief Operating Officer for CFIT, which is the Centre for Finance, Innovation and Technology, where we delivered the industry-wide coalition on open finance and some recommendations for smart data across the ecosystem. We're going to do two things very quickly. First, quick intros and perspectives on what bank modernization means from our perspectives. Then 4 themes: context, core and customer foundations, outcomes, and cloud to AI lessons. I've already done my intro, so I'll move on. For me, bank modernization is more about sequencing decisions rather than a shopping decision from what I see from my clients. Michael.
Thanks, and I think our titles were mixed up. I saw founder and CEO next to my name, and I got excited for a second. Unfortunately not. So Michael Sheripnan, I'm a managing director at EJF Capital and a partner in our venture strategy. EJF is an asset manager. We manage about $5.5–6 billion of capital on behalf of our clients, headquartered in Arlington, Virginia, with a second office here in London. We are a holistic capital provider to banks and other financial institutions, from equity to credit, from public to private. So we run long-short equity, long-only equity, sub-debt, so we know what makes a bank valuable. And I'm part of our ventures team, where I invest in bank technology, so anything that our partner banks can use to increase their value, make themselves more efficient and profitable, we would invest in on the early stage, from Series C to Series A.
Lovely. And bank modernization, what does it mean to you, from your perspective?
Yeah, listen, I mean, we're going to talk about this in more detail later, but for me, it's all about business outcomes, right? So you either have to grow your deposits, make the bank more profitable, to eventually grow value for shareholders.
Awesome.
And that's how I think about it.
Lovely. Thea?
Hi, everyone. So I'm Thea Locker from Lloyds Banking Group. I'm the head of the strategic roadmap there and planning. So what modernisation means to me, I think everyone will be very familiar in the large bank context of what it means. If you've got a system that was created in a year that started with 19, then it's probably not very modern. If it's on a language that no one programs with anymore, unless someone who is over the age of 40, then it's probably not modern. And from a way of working, if you're being very waterfall, then that's probably not very modern at all. So obviously we have been on a distinct journey to modernise, certainly over the last 10 years, and there's still a way to go, because there's a lot of systems with 19 in their kind of date, but we're definitely on the track.
Awesome. Leah.
Hi, I'm Leah. I'm the Retail Product Officer at Shawbrook. So Shawbrook Bank is a specialist lender, and I think that's why this kind of modernisation of banking is so important for us. We have kind of a specialist customers, and what it means to me is using technology to really service those customers who need something special and is not necessarily off the shelf. And I think as we see, we have multiple, you see in the banking industry, we have multiple kind of legacy core banking providers that we'll talk a bit more about later. And how we're really utilising core banking all the way through to that front-end customer experience to hit the mark with that customer segment is probably what is special to me at the moment.
Awesome. Barry.
Hi, everyone. I'm Barry Lloyd. I run the European arm of a company called Impetus. We're a specialist transformation partner to many banks, financial services organizations. We bring a lot of automation and obviously skill sets to that process. For me, transformation is, my company is often down in the detail of what platforms are being migrated or transformed. And in the world of agentic, we bring a lot of agentic approaches to that transformation. But actually, for me, it means keeping an eye on and keeping your memory on what the original planned outcomes were. And making sure you're always on track with those, because in any multi-year program, things change over time. So it's super important to keep that in mind when you're going through these arduous and complex projects.
Awesome, and we'll cover that scope creep and scope change, definitely. Right, kind of bang on time. So theme one, kind of contextual. Thea, modernization isn't one thing, and it depends on the strategy and the context and where you're starting and where you're trying to go. Can you set the frame for us? When you say bank modernization, what does that mean for you specifically in regards to a large bank?
So I think there are different aspects to it. So I think you've got it across different layers. So you've got the journey level modernization and the different offerings and propositions, the way you think about products in a modern sense. You've got, I guess, the data layer and how you modernize that away from what would have been, certainly in the early noughties, siloed data that was held in very kind of strict buckets, and never the twain should meet across it. So it was difficult to get to single customer view, something that was truly relevant to the customer. And I think that's gone, hard yards in the last certainly 20 years to get to something which has been kind of pulled forward by the likes of Amazon, GCP, and then you've got like kind of the product side and that kind of modernization. So every layer needs to move forward, as well as your actual organization, the people in the organization. And you've got to be delivering value for your customers and clients at the same time that you're changing the underlying parts of the bank. So it's quite a tricky orchestration to make sure that you are delivering value at the same time as kind of changing every part of the machinery behind the scenes to move it into a modern stack. And
in the programs that you've seen or been a part of, even leading, especially when it comes to banks, what have you seen as the main kind of blocker? Is there a concurrent kind of theme?
So I think in terms of blockers, you can have a framework that you set out with which isn't kind of created to allow you to modernize particularly easily. So unless you've changed all the aspects of the operating model, so your processes, your governance, they can be set up to do something which is then slightly antithetical to what you're trying to do from a modernization perspective. So I think that's something that we've learned is you've got to take all aspects of the operating model and make sure that they are fit for purpose for what you're trying to do. And then I just think it's hard yards. You need to have resilience to get through it. It's been we'll have probably all experienced those, platform modernizations where 90% of your customers have been moved off, but 10% stayed on, and they're just sitting there as a back book, but the cost of that, the cost of compliance for it, but they're the ones who are hardest to get off. So knowing that you're going to get to the end and having like a laser focus on actually getting to the end and not leaving that long tail, I think that's a very important thing to get to a healthy modernization.
Yeah, it
approach.
takes kind of discipline and I guess resilience that you mentioned to actually deliver the outcomes that have been essentially confirmed in the initial project kind of funding where you got the budget for it. Okay, Michael, from an investor and market lens, what separates credible modernization from kind of more like expensive theater that looks good but isn't good from your perspective?
Yeah, no, that's a good question. I would go back to what I mentioned a few minutes earlier around business outcomes. So it's pretty simple from my perspective. The way I think about it is as top line, so anything that helps a bank grow deposits, loan book, increase your NIM, or sort of the back office, anything that helps you increase your profitability, your efficiency ratio, sort of et cetera. And that's how I would approach any sort of technology adoption. So any piece of tech that helps you retain your existing deposits and win new deposits helps. And obviously, any tech that helps you be more efficient and spend less on operations and the core that I know Leah will touch on later, it helps as well. So that's what I would try to link it back to. What I think is the main challenges based on what we see, and we work mostly with mid-sized banks. So in the US, we work with community banks, regional banks, and in the UK and in Europe, we've been a capital provider to neobanks. We're a debt provider to Shawbrook at one point in time. So what I have seen is inertia in some parts of the market, especially when it comes to deposits, when people don't really appreciate the threats coming out of the technology-native organizations. You may have seen that in the U.S. across the pond, Capital One just acquired Brex.
Yeah.
So for the longest time, people used to say, well, it's not a big deal. Brex is just a tech company. But then when SVB went out of business, they got inflows of billions and billions of deposits, and you just, you drip and drip and drip your deposits. At the end of the day, customers need a high-quality tech, and they want a broad suite of products. And if you as a bank cannot deliver that well, you're going to lose your deposits.
So you're looking from a financial metrics perspective, AUM, cost to serve, return on investment, things of that nature that move the needle.
Yeah, these would be some of the key KPIs and again, I'm not a bank investor, I'm a technology investor, but that's what I think my hedge fund colleagues
I think
would
those two are kind of merging together, though, isn't
Probably.
it, very clearly? Okay, let's move on to the next topic then. So the question is that what are we actually kind of modernizing? Is it the core? Is it the data? Is it customer foundation? Is it everything? Everyone says core, Leah, but very few agree what it means from your perspective. Shawbrook, which I would say is like an up-and-coming kind of bank, I would say. Some people call it neobank, some people would not. I don't know. I know that your main kind of business is lending, I would say.
I would agree. We have a decent deposit book, I would say. But,
very good, yeah.
Yes.
So what outcomes are you prioritizing, aiming for, delivering, and what in that journey do you focus on the customer and data as well?
Yeah, so I think ultimately that kind of core banking question, or when we look at kind of modernization in that space, there's a few ways, right? So there's what we see, and there's all the bits that sit underneath. And when we talk about, I'm really interested in that kind of core banking space at the moment, but we put it as kind of one umbrella word. And I think the big thing here that kind of differentiates us or helps us build what is useful for our customers is breaking that core banking into kind of proportionate parts. So where we look at the vision we want to drive brilliant propositions for our customers, and that's product configuration. That's easy API-driven product configuration. We think about customers. We want to have really seamless operational servicing. That means we need to have API-driven single customer view. That's the vision for all, I appreciate, so it's not as easy to do that out the box, but we need to have a focus and a vision to understand what we're actually trying to achieve is a really simple servicing model that drives the right thing for the customer. And ultimately, the right thing for risk management, financial crime, is all driven from that really strong customer understanding. And then you move your next bucket of core, I guess, is accounts. So that relationship between the customer and account, again, absolutely critical to that great service. And my huge favorite, and I think they're one of yours too, is payments. So that hyperlink between them all. And so when we look at that kind of core banking strategy, that underpins this fabulous experience that you can offer no matter what channel. And I think with evolving technology, who knows if, is the mobile app going to be the channel of the future? Who knows? But the things that are going to be the most important for banks ultimately, and certainly where our focus is that those really solid platform foundations that allow us to hopefully offer the, back to that vision statement again, the absolutely best propositions, best servicing, and kind of a seamless experience for the customers. So making sure you remember it's all connected.
Yeah, I mean, I think everything you've said there I agree with. I don't think any other person would probably describe it in a different way. Like, that is the gold standard. That's what we're trying to get to. But Barry, from your perspective, as I would say, like a solution and delivery partner and consultancy in the industry, you see also issues when it comes to data integration. You talked about scope creep there, core problems, core programs having a 5-year journey, pivoting halfway through. Account executives could change, the funding changes. You've probably seen it all. What are those key things that banks and big transformation programs underestimate?
So many. So many things. The biggest detail that we as an organization always strive to understand before we ever get involved in any transformation program is the complexity. I think that's the biggest variable in getting to your outcome or not, unpicking every possible corner case, every possible, from a technology perspective, every workload that you're running, understanding how everything is interconnected. Because in life, everything is interconnected. If you can get to a picture that helps you understand that, you can then start to plan your journey. And that is super important. If you don't do that first piece right, nothing else will flow. You're right that things change. As I mentioned in my intro, these are complex, often multi-year projects. You bring a lot of automation, you bring a lot of skills, but even during that time, we were talking earlier on about the technology itself will change. New technologies will come to the fore. Agentic is the current one. In 3 years from now, could there be something new? Well, some of these projects last much more than 3 years. So it's being able to, again, always keep track of the outcome that you were looking to achieve. Now, that itself might evolve as well, but making sure you understand everything that you have, what parts of that should move to the right to a modern architecture to support the business outcome that you're looking for, but always understanding the full complexity, the full detail of everything that you have, so that you can do that journey and not make a bad move.
You make a good point, to mention something, you know, for these long transformation programs, 5 years plus, you know, in some ways you're taking a punt on the future. You're making a prediction of where it's going to go. Like I always tell my children, don't pass to where the person is, pass to where they're trying to get to, right? And it's one of those things that the reality is that we don't know where the financial service is going to be in 5 years, but we still know that the foundations make sense, good products, good customer experience, you know, a good value for money, you know, things of that nature. So and those principles make sense, and then you're probably leading in the right way. Okay.
Awesome. May I note something? Just as we talk to this, I realize some of it may be theoretical, right? So one of these, I always think when I come and watch these, there should be a learning. But one of them would be, I think as we go through these programs, we've got the vision we all believe in, and we've got the architecture we all believe in, but ultimately there will be a trade-off along the way. So anyone who's been a part of it knows the trade-off is there. And we spoke behind about making sure that whatever the trade-off is, just be comfortable that that vision that you were going after, that objective you were going after, you are not derailing that objective because you ultimately made the trade-off. And I suppose that kind of principal takeaway for me is document the trade-offs and be really clear that you understand what potential detriment or tech debt you're building in for yourself later down the line.
I love a good pros and cons, and then a decision meeting. As long as there's a general consensus, that'd be good to go. You don't want to be the one person pushing it, and then, you know, in 2 years' time, you know, it's a headache. Thankfully, I've escaped one of those situations, so that's fine. Okay, let's moving on. So, Michael, we've kind of covered this already in some of what you've articulated, but let's talk about outcomes. If modernization doesn't necessarily move outcomes, then what's the point? You must see some companies spending a lot of money and not really getting the return on what they expected, or they get lost in the journey of delivery, and then where's the clear outcome? So if you had to pick maybe 2 measurable outcomes that for you prove modernization is working and is valuable and then is investable, is it the ones that we already mentioned, or is it something else?
Well, ROI. So a lot of our companies, the companies that we invest to, all of them go through the POC process with banks. As a matter of fact, one of our portfolio companies, one is working with Lloyds as your sandbox provider. And so the ROI calculation is a big process of that POC. So as a technology vendor, you need to be able to very clearly articulate it to the bank. Okay, well, you, Mr. Bank, are going to pay me £500,000 a year. How can we justify that, or 50,000 or whatever? So it needs to tie back to that eventually, and that's what you need to show to your executive committee, to your investors eventually, regardless of whether you're looking at a new digital banking platform, a new piece of AI for loan origination, a new fraud prevention. So that's sort of a business outcome that drives the need to adopt this tech. There's also another element to this. There's a regulatory component to some of this necessity. Like, think about scams. So now banks are on the hook in this country to reimburse customers for scams in APP, right? And with PSD3 coming up in Europe, it'll probably take a similar shape, and we'll see where Section 1033 goes in the US, but overall we're moving in that direction. So that creates a lot of pressure, not just as a business outcome, which obviously would be helpful in terms of customer satisfaction, but also because you have to do that. So that's, in my opinion, that's how banking and financial services more broadly is very different from any other part of the economy, especially when you're a tech vendor and you're trying to sell into that. You just need to be very wary of what's driving the buying power.
And this is something I've seen not only in banking and fintechs, but also scale-ups, whereas the company necessarily isn't structured specifically to accurately calculate ROI on whether it's cost to serve, whether it's understanding the various transaction cycles and the verticals, is it per product type? What happens if you've got a shared services component? How do you attribute certain elements of that OPEX and CAPEX into the wider profitability and the P&L? It's not as simple as, yeah, this makes sense. So, and I know banks are going through a big cost, not optimization, but clarity on what inputs equal what outputs. And even that's a moving target. But yeah, I've seen that a lot, especially when it comes to investment budgets. Every year you have your bid, you have what you're trying to go for, then it gets basically linked to must-haves only. But you have to be able to articulate it very quickly. I'm looking at time, and we're going to move on to the last point, if that's all right. So Barry, cloud to AI, lessons and cost control. Cloud has taught us some very expensive lessons when it comes to implementation and what not to do and what you should do. AI could potentially be a lot worse if people aren't careful. From your perspective, what are you seeing in the industry? What are the questions you're getting, you know, in those paid meetings where you're delivering value? What are those key issues?
So right now, I see a lot of people, a lot of organizations starting on their agentic journey. And, you know, the payoff is some way in the distance yet. So many are looking at that and thinking, how are we going to get to the point at which we can productionize, we can trust, and we can use an agentic approach for all our banking, or at least some of our banking processes. And it's that initial inertia to get going. There's a lot of, if you like, plumbing, we spoke about plumbing earlier, that gets in the way of making progress. And then sometimes the business behind that, often that's an AI team or a special project team that's looking at something like an agentic. And in the meantime, the business is waiting. We're waiting for an answer to, can we actually use an agentic approach to improve processes, to make more information available to our employees or to our customers?
We've got a great question. Build versus adapt. Is it more efficient to branch off into a new greenfield environment or to evolve our current organizational stack?
I saw that question. It's a great one, whoever posed it. The answer itself is contextual. In other words, it depends.
It depends.
Most organizations we work with have that exact same question, and most often the answer is it's actually a hybrid approach. So again, if we unpick all the complexity, there will be business processes, business logic that absolutely should be moved to modern compute or to agentic, others that would probably be served better by rewriting or refactoring in some way. And again, we try and understand that as part of the assessment work that we do with our clients.
So it's not black and white, it's usually a spectrum.
It's a spectrum.
Yep. Yeah. Okay. Thea, we're going to end with you. No pressure. So from a governance and resilience lens, specifically when it comes to AI, approving AI proofs of concepts, agentic maybe, you know, big banks have lots of big budgets. What are your non-negotiables if you're leading some AI implementation, or even AI if it's going into production at scale?
Yeah, so I think with AI, we generally have taken a responsible, cautious approach by making sure that our first implementations of it, the proofs of concepts, but also just our first implementations are colleague-oriented, which means that you can understand exactly how it's going to work, how it's going to play out by having a colleague audience, and that's both for our kind of more customer-facing propositions, because we've got a beta community inside of Lloyds that tests what we're doing, but also for things that were more scalable, that we put it to our colleagues first, which means we understand the technology through that. We've also, I guess, gone further forward by having AI ethics, a control tower that means that, you know, you don't go further than it's safe to do at that time, and setting that up in advance so that you don't kind of get the Wild West, but also opening up some of the tools so that your colleagues can use them at the same time for their kind of everyday life and everyday efficiency. So I think the safety first in an AI sense, so that you're kind of safely exploring the ground that it's going to open up, is absolutely critical, and probably my one piece of advice, because otherwise, you know, we're a large regulated industry. You don't want to be doing things which are very unsafe. And in the AI world, we all know that there are things out there where, I don't know if everyone's seen the Amazon advert recently with Chris Hemsworth, where it's all talking about how AI is going to kill us all. And you're kind of going, it doesn't really say it's not going to. So it's a bit of a funny, weird advert for Amazon to put out. But I think, you know, that's not how we'd want to portray ourselves in a financial regulated industry. So safety first, make sure, you know, you've got your seatbelt on before you drive the AI car.
Yeah, I think the ethical AI piece is really important. I know the FCA is doing quite a lot of work on the explainability of the black box when it comes to explaining client decisions and why was it yes, why was it no. We're also looking at outcome driven. If outcomes are better than where they started, then there's going to be some leeway on that. I think a lot of people are looking forward to some clarity on that regulation.
And human in the loop, right, to make sure that the outputs are what you'd expect and that they have checked backwards and forwards on that.
Definitely.